Okay, so for today, we're talking about psychology, right? This is an intermediate class. Um, through we'll get to understand trading psychology, um, how to control our emotions in trading, um, and of course, improve discipline and consistency, right? Because one thing about trading is that your psychology will be tested alongside your edge, right? So okay, let me ask a question. You can just drop a response on the chat box, right? Have you ever entered a trade you knew you shouldn't take? Yeah. Have you ever entered a trade you knew you shouldn't take? That's one question. Have you ever done that? Hmm? I need feedback. Well, if you've been trading long enough, I bet you must have, right? Now, the thing is that um that's not you struggling with your strategy, all right? That's just you struggling with your psychology. But can you hear me? Can you hear me? Can you hear me? Jose, am I loud and clear? That's what I'm asking. Can you drop a chat in the chat box if you can hear me? All right. So I asked a question, yeah? If you're ever taking a trade you knew you shouldn't take. So I'd like to have a response on that as well. Have you or have you not? Well, that's life. So it has happened to all of us, right? So today we'll be, you know, psychology sometimes you can call it the hidden enemy of traders, but then you can turn this perceived enemy into an ally, right? So student psychology is simply the state, emotional mental state that affects trading decisions. And there are so many causes, right? Now we already know that forex is 20% strategy and 80% psychology, your mental state, how you feel inside. Because strategy, your rule, they tell you what to do, right? You can say, once the market does this, I do this. I don't take more than my rule is not having three losses in a row in a particular day. Uh, I don't have to lose so percent. I don't, blah, 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 blah. But the psychology is what you actually do, all right? Right, your psychology determines whether you actually do all of that, right? So now, some of the reasons why psychology is important, right, is one, right? With a good strategy, right? Fear can make you exit early, right? Fear can make you exit early. Greed can make you overtrade, right? Revenge, of course, will make you lose more, right? So many trader will still know the strategy and still lose more. Now, right? So look at this very trade I took yesterday, right? Entry here, TP this point, right? Now, at a particular point, it occurred to me that, oh, I'm not sure this trade might get to this my TP as early as I wanted to. I would have closed earlier, but will I say I was greedy or I was so stuck up to what I want to get? My TP was like, the market was like roughly 6 points to my TP. That's a lot of, this is like more than, this is like roughly 55. points of its 5 pips. That's a lot of pips, yeah? I would have closed where I didn't close. I closed somewhere down here, right? Losing almost 20 pips on this move, right? Well, I got in again. The market got very close to my TP. Like, you can see this on my market. Got very close there. Well, I didn't close still. I got taken out on break even. This is roughly, this gave me plus or minus, to check it. Let me see. This is 30, that's something points, right? It's like roughly, let's say roughly 30 points, right? I still didn't close. Now, what's the problem, right? You're stuck to your, you know, having a healthy trading psychology knows, also know when to leave the market, when you know favors are no longer, not favors. The markets or the trend is no longer aligned in your favor, right? I saw a couple of reversal moves, but I was hell bent on my move, right? Well, it's a good thing that I had break even because I would have been taken out. You understand? So that is it. So cases like this, we can be so greedy, have our eyes fixed on that very amount we tend to make from the market, that anything less than that is not worthy going home with, right? That's what happened to me yesterday. I would actually close, so yes, very good. Because this one gave a lower low. That should tell me that, okay, this market is actually reversing, but I'm still hoping and feeling. So, well, some of the psychology traps in Forex, yeah? So, as I explain this, you know some of the ones that some of the traps you've fallen for in the past, right? Number one is fear. Number one is fear, right? Fear is basically um one, closing trades too early. Now, if you've ever done this, you're scared. Now, what are you scared of? Losing the money you have floating, right? How can I lose this amount of money floating here? It's better I secure it and perhaps try another day, right? Number two, not entering valid setups. FOMO. You think you've missed the entry, you just rush in, you enter without waiting for the perfect setup or the perfect entry for your trade, right? It happens. It happens. It happens. Number three, reducing lot size excessively, right? Because you think, you aggressively reduce your lot size. Let's say, the more you win, right? The saying goes, the more you win, the more you add to the winners. But sometimes the more we win, the more you know, we are a bit withdrawn from, okay, let me start reducing my risk. The whole thing is not to lose what you already have, right? Now, um, now the most important thing here is to trust your setup, right? Use proper risk management. Know what you are risking and be accept the fact that if the market goes your way, I am okay losing this very amount, right? If at a particular point you are setting up your trade and you know if the market hits your stop loss, you're not okay losing that amount. Just reduce your loss size. That's just it. Reduce your loss size. This handles the fear a part of it. You understand? Let's say you're risking 2% of your account. If you know you're not okay losing 2% on that very trade, reduce it to 1%. And also get um sometimes closing half trade can be fear. It can also be a good psychology, right? So if you know you have this little bit of fear, instead of closing the whole trade here, you can close half of it. MT5 has that option. You close half, leave the rest running. At least you know that, okay, you secure your profits and you still want to sit and watch your setup play out. That's also a good way. Mhm. Number two trap is greed. That's what exactly what happened to me yesterday. Yeah. Over trading, increasing loss size too quickly, and the last, ignoring take profit. Yeah. I got my cues, take my profit, but I didn't. Got another good setup. Take your profit. No, I didn't. Right. So greed. I was thinking the extra what's left here was what is this? Now, what do I want to make from this extra move here? That's this one here is not even enough, right? So that's it. All right. But I took a good decision yesterday still, which I believe we'll still talk about in um in this class, right? So one, you're in profit. You decide to, if you know what, let me remove my TP. I believe the market will still pump high or go down well, right? Then of course the market reverses. You lose everything, right? You lose everything. Another good way for risk management is certain if you've seen, yeah, let me use this case for instance, right? The market did this move, right? Gave this strong high, did a little pullback or whatever it is. Maybe you're looking at this on a lower time frame, right? It's just like if you're seeing higher highs and higher lows. If I enter the trade at this particular point, right, and the market make this move, came back, right, give me another high, I can comfortably put my stop loss. Maybe my entry is here, put my stop loss below this area. The real deal is if the market gets to break this low, this buy move is no longer valid. That's all. It's that simple, right? So this is a way to actually protect your trade. One in the trade, all right? If it takes you out, fine, good. If the market later goes back to hit your TP, okay. Mm. But some of the rules you have for yourself is in a buy move, the market is supposed to maintain a buy move, right? If it breaks one low, giving a lower low, then I think that is a point of reversal. Maybe your buy move is no longer a buy move, right? So that can also um help, right? So the third is revenge trading, right? Revenge trading. Of course, after a loss, yeah, you want to. I was really tempted yesterday, right? After I was taken out, after I was taken out via break even, I wanted to go in again with higher risk. What can this market take me out? For what? But I know that was not the right emotion. It might be valid going in again for a buy, but that wasn't the right emotion, right? You know, you have to be self-aware enough to know what your emotions are, right? It does really help. Okay, that was not the right emotion, and it, it won't always end well. That's one thing. It won't always end well. Now, I'm not entering the trade because I have a setup. I'm trying to enter the trade based on the former setup I had, which has already taken me out. Understand? But majorly, I wanted to enter that trade just to make back what I thought I should have made that day. I was in good profit yesterday, but I had a higher expectation, right? I was supposed to make some amount, but so that was not the best emotion. So what did I do? I closed my charts, closed my laptop, and went about my day. All right. Yeah, revenge trading is basically trading emotionally, right? You lose one trade, you enter another one instantly, you lose again, boom. Before you know it, you get into the I don't care mode. Spanking trades like multiple lot size, right? So one of the solution is once you once you once you take once you have a loss, take a break, right? Always have your daily limits, like the amount of loss you're supposed to have in a day. Always have it. And once you hit that, fine. There are always opportunities. That's one thing. The market is running, and there are always opportunities. You cannot force yourself to emotionally trade at a particular time. It's best you come back the next day with a clean mind and go at it again, right? Now, the fourth trap is overconfidence. Sometimes they say um, winning streak hurts more than a losing streak, right? You're in a winning streak. You've had, like, the market has been respecting your entries back to back to back, 1 week straight, 2 weeks straight, perhaps even 1 month. Now you feel invincible. Now you don't care. You throw caution to the wind, you risk aggressively. You don't really care because my setups are premium. The market respect whatever I say. That's a trap, right? But when you're overconfident, you you risk risk management and overconfidence, they work two different parts, right? Now you ignore your analysis. Yeah, you trade too much, basically, right? Exactly. And you start entering random trades, thinking that, okay, if this happened before, perhaps it might happen again. The most important thing is that, there's a saying I came across. Um, um, I'm humble enough to know, um, let me see. Let me know if I can get it. I think I'm humble enough to know I can lose it all. I'm proud enough to know I can make it all back, right? So in that winning streak, be humble. You're just a man. Markets just align with you at that particular time. Just be humble. Secure your profits, place your withdrawals if need be, then wait for a better setup or wait for another day, right? Stick to your risk rules no matter what, right? Stick to your risk rules no matter what, right? Then the last is impatience, right? Impatience. Entry before the confirmation, thinking you missed out on the setup, right? Trading during bad market conditions, just like I think it was Thursday, for a particular time on Thursday, the market was quite very, very slow, right? Try to force a setup in a slow market can be so detrimental. So detrimental, I tell you. So detrimental. Well, the best solution here is wait for your setup. It's that simple, right? Know what you're looking for and wait for it. Know what you're looking for and wait for it. No guys, repeat this. Know what you're looking for and wait for it. If you see it, take advantage of it. Not just if you see it, take advantage of it. Now I see here low, high, low, high, lower, low. Respecting this. Now look. Hmm, let's watch. This is looking like an area of interest. But let's see. All right. So now I've already talked about FOMO, fear of missing out. It's actually a very good. How many points? Roughly 20 points. Right. Now if you should buy, where is it heading to? Never know, self. Well, FOMO. This is another trap, right? Fear of missing out. Entering late, chasing the price. Now, sometimes if the market leaves you, let it go. Yeah, there's still other opportunities, right? Accept that you missed the trade. It's not a must you take a rate setup. Accept that you missed it. Wait for the next setup. Now, your discipline, right? Breaking rules, ignore. See, the most important thing you can do for yourself here is to keep to your commitments, right? Keep to your commitments, right? Keep to your commitments. Keep to your commitments. I know. This has not been taken out yet. Keep to your commitments. If you say you do this, do that. If you say you won't trade by this time, don't trade by that time, right? Because it even helps boost your self-image, that you're able to keep to your rules, right? You boost your self-image. right? Moving stop loss. Because, like I said earlier, if you determine the amount you want to lose on a particular trade, keep it at that. Aside from that, your moving stop loss should be that you've seen a valid reason to move your stop loss to break even, not out of, out of. In fact, sometimes you move your stop loss even further. The market is coming to take you out. You're like, let me give it more room. Let me give it more room. Let me give you more room. That's like one of the ways to mess up your account, right? There is no just leave it there. If it takes you out, fine. Because before you put the stop loss there, you already done your analysis and say, okay, this is a healthy point. That if the market touch here, that means my analysis is wrong, right? That means the analysis is wrong. Market didn't go my way, right? And the analysis is wrong. You get? So that is it. Oh yeah, this makes sense now. Seeing a clear double top here. This makes sense now. It makes sense now. I see that? It's a clear double top. Now I think we might be heading to these lows over here. It's quite interesting. Okay. It's an interesting market, isn't it? Hmm. I'll take it to be alive. Okay. So I'm mixing so many things together. I'm looking for a setup while teaching as well, right? So from here to here, 32, roughly 50 points. All right, that's good. All right. So that is it. I do wait for a setup by 6:30. So we're waiting on that as well. Right? So now, what do professionals do? Like the pro traders. Number one is acceptance, right? They accept the losses. That's like the very hard thing for us to do, basically. Accepting that loss, right? You accept the loss, you follow your rule, you stay calm regardless. Yeah, you trade less. It's not about trading, having loads of trades in a week, 20, 50, 17, whatever amount of trades in a week. It's not really about that. You can really, in a week, I just take like 4 trades and still be very profitable. In fact, you might even end your P&L for the week could be higher than the person that took like 20 trades. So it's not even about the number, it's not about the quantity or the quality, right? In all, your sole protection, your sole aim here, aside from making money, in fact, your sole aim here is protecting your capital. That's number one. Making money is second, right? Making money is second. One man said, I think, see, the rule of the game is whatever you're risking, you should be able to do that 99 times more. So apparently, that's like risking 1% of your account, right? So that even if you lose, you're able to do the same thing 99 times more, right? So that is it. Because there are bad days. If on bad days, you lose it's like a war, you lose everything you have. Then how then do you intend to win the war? You should lose everything you have on bad days. Because good days are coming when the tides will run in your favor. What do you do then? Right? What do you do then? All right. So, amateur traders focus on risk on profits. The pro traders are more focused um on risk. So now one thing you need to do for yourself right now, like for today, is to critically think. Yeah. Ask yourself, which of these traps affect you the most? All right. I believe you already have your trading rule. If you don't, prepare one today. I think I had a course one of the classes where we talked about trading rules. Yeah. Now, so after putting those trading rules with discipline, at the end of the day, what are we chasing? Money. Yeah, fine, cool. But money comes and goes, right? Opportunities comes and goes. If you miss today, you still meet another one the next day, right? So there's no rush in the market. So long the money you're making from the charts are not uh, is not the money for your full livelihood. That's why it's best, right? Why having this? Have something else on the side, right? So you don't tie so much emotions to your profits. You get? You don't tie so much emotions to your profits. You get? You don't tie so much emotions to your profits. So your biggest enemy is not the market, right? Just your emotions. If you can have that fixed, then I can say that you've solved 80% of your problem. All right. So that's it about that family. That's it about that family. That's it about that. I'm seeing a good setup here, bro. I don't know when best to enter. I have a feeling this is a low. This is a low. This is one low. Right. This is a large average. In fact, let me see what average can do for me right now. This is a high, this is a low. 50% points. Yeah, exactly. Exactly. Needs to tap. Needs to tap into this zone. Mm, That should be my best entry point for yourself. So let's wait and see. All right. You might even want to, this is a field FVG. I'm also looking at this area too. But let me see if it will even come into here. Let's have this letter so much. Let's have something else right here. See if it's gonna respect it as well. So let's wait and see if it comes back. This is a double top. Okay, comes back here. It has broken this low, which is nice. Entry necessary here is too freaking late, right? So we need, but it's a very large gap created. So it's expected to come back. If it doesn't, then it's what it is. So family, um, have a blessed day and it's going to be a great day, regardless, right? I believe you got something. Okay, before we end, do you have um before we end the session, any question, right? Any question before I call it a day? Any question? Any question on whatever I've said? Psychology, everything, risk. Any question before I call it a day? Just looking at the charts. Just looking at the chart. Let's come back. Yeah. Any question? Any question? Mm, Any question? Okay, understood. So it's interesting. 27 points. Okay, it's actually good, not bad. Okay, all right. I think in absence of no question, we call it a day. All right. All the best for me.